Hello and welcome to episode 17 of Bank to the Future Live. This is our 17th episode, and I'm back grounded again after a little bit of a roadshow and a little bit of traveling. So I'm no longer in the hotel rooms. And today the main topic is going to be on the different types of ways to invest in crypto companies. So obviously, as the very first securities business in the world that was investing in crypto companies, we've developed a lot of products over the years and seen a lot of different ways. We've also seen lots of disruption, even within the crypto market. For those of you new to Bank to the Future Live, if this is your first episode, then this is where we discuss with our investor community, our Bank to the Future community, our Bank to the Future token community, our BF wallet community, and various other products are dedicated around Bank to the Future related topics. I give a lot of talks on crypto and banking and Bitcoin and economics and various other things, but I don't often get to just discuss what we're up to at Bank to the Future and really go live and broadcast to our investors. So today we're going to be going through all the different types of products, whether that be security tokens, equity, convertible notes, safes, SAFs, SPVs, and all this financial jargon. And try and condense it into something really simple so it can help you understand how to navigate investing and the different types of ways and products in which you can do that. Obviously, also, we'll be covering your questions. So there's a live chat. Remember, if you're on Twitter, use the hashtag BFLive. That's hashtag BFLive, BF standing for Bank to the Future. And we'll try and pick up your questions there. Also, we've got our token sale Telegram community group, which has kind of emerged into our community. That is BF at BF_token, where you can ask questions in our Telegram community as well. And we've also got Facebook, LinkedIn, and we'll try and pick up some of your questions. But the main place is using the live chat. So normally we have Famida moderating, but Famida is currently away, and we have Irvin stepping in today. Irvin is from our pitch management team. So we have different teams. Famida is from our investor relations team, which is dealing with investors that are using our platform. Irvin sits on the other side of the fence in the pitch management team, and the pitch management side is helping companies that are going to be pitching on our platform get ready and go through some of the due diligence. So he's going to be picking out some of your questions on the live chat. So please do use that live chat, and depending on how many questions we get there, we'll take those, or we'll look at some of the other mediums and channels to find your questions. So the way we normally do this is we will be going through the main topic, which is the different ways of investing. Then we'll be moving over to new features. We've got some exciting new features on the Bank to the Future wallet, the BF wallet, that we'd like to share with you today. And also we'll be going through portfolio news. There's lots of portfolio news. And then finally, we'll be finishing off with your questions, where you get to ask me anything around some of the topics covered today or other topics around the Bank to the Future community. So without further ado, I'm just going to head over to my show notes. Before we start doing a screen share, I'm just going to have a quick look at my show notes and go through some of the different types of products that are listed. And then what I'll do, once I've gone through them, we can head over to the Bank to the Future platform and just trying to get rid of some of these pop-ups. We'll head over to the Bank to the Future platform, share the screen, and go through some of the portfolio news. So without further ado, the most common product on BnkToTheFuture.com and the most common way to invest in crypto companies is through equity, straight equity. And remember that the way that our companies and deals work is, so we would list a company, and the company would agree to sell Bank to the Future and its structure some equity in their company. Equity in a company is the same as a share. A share means that if the company ever pays dividends, you actually receive a dividend to all shareholders. But the most common is most people don't invest in private companies to get dividends. That would be more of a public company that would be having regular cash flows and paying dividends. But most people are doing it for ultra high price increases in share prices. So those are the investors, the Silicon Valley VCs. They're looking to invest in a private equity in the company, and hopefully they go on to become a unicorn, which means that they're worth more than $1 billion in terms of share price. And then they're looking for a minimum of 10x return on the risk investment, is kind of the traditional venture capital model. Now, the issue is that most companies do not want thousands of investors on what's known as their cap table. Their cap table lists all of the shareholders, and it's a nightmare and a pain to actually administer. And then every time you have to do a legal change or some kind of corporate action, then the more shareholders you have, the more harder it is to administer. The more shareholders you have, the more problematic it is to secure future funding. So we have to put together our special structure in order to allow these companies to want to open up their investment to a much wider pool of investors through BnkToTheFuture. And that is called our SPV. Our SPV is a special purpose vehicle. It's an investment banking term that just refers to a special company that does one thing and one thing only, and that's hold shares on behalf of investors in the underlying equity. It's got several benefits, and if you go over to the platform and underneath the invest button in any of the pitches, you'll see a quick FAQ. And one of the questions is, why set up an SPV? Why invest via an SPV? Well, it means that you don't have to be a professional venture capitalist that does this full time. You could just be a high net worth individual, a sophisticated investor, another qualifying investor on BnkToTheFuture, but without actually having to make this your full-time career, because there's a lot involved in being a direct shareholder in a company to not prevent the company from progressing. So by investing via our SPV structure, it does a couple of things. Firstly, it means that you get many more companies that are willing to take on an investor in a smaller pool, a smaller size. And that smaller size means that you can diversify more widely. And rather than having to put all of your eggs in one basket, you can invest in 15, 20 different companies via our SPV structure. And the average active investor on our platform invests in an average of 14 companies in their portfolio. So what this actually does, so the way our structure works is that because of this, they're willing to sell shares in their company to one of our SPVs, and via one of our SPV structures, you actually get shares in it. And it means that they only get one investor on their cap table. That opens up a lot more opportunities, and it makes things a lot more streamlined and easy to administer. It also means if they ever pay dividends or exit in the future, they only need to pay the SPV, and then we can redistribute those funds to our investors on a pass-through basis. And whenever you invest in an SPV through our platform, there's an investment agreement that outlines exactly how that works and all the terms and everything around that. But equity is the first product. It means you become an owner in the company, or the SPV becomes an owner, and you become an owner in the SPV. It means that you get to benefit from any exit proceeds or any increases in the share price or any dividends that might be paid in the future. The second product was really an innovation that came from Silicon Valley, and that is that often a company, they don't quite know how to value themselves. And so when you don't know how to value yourself as a company, then you look at a different type of product, which many earlier stage companies use, and that is what we call a convertible note. So if you head over to any pitch on BnkToTheFuture, we don't have any convertible note pitches live right now, but we will in the coming weeks, and we have had many in the past. It's the second most popular way of raising funding on BnkToTheFuture and for investors to invest. The way a convertible note works is essentially you delay the process of having to value the company. When something is really early stage, it's really hard to value it. Our particular model is that we tend to get a lead investor, a professional venture capitalist or a lead investor to set a valuation, and then we allow our investors to co-invest on the same terms. The way a convertible note works is you essentially set three things. The first is valuation cap. The valuation cap is the maximum valuation that you will receive when the convertible note, which is essentially an investment contract, converts to equity or shares. And what that means is that you can delay the process of valuing the company. But there's a couple of other perks that you can look for when investing in a convertible note. The first is an interest rate. Because it is actually essentially you lending company, you're not going to receive it back. It's actually going to convert into equity, and you should read the terms. So the way that it works is on the investor page of every pitch, we'll have the terms that we will be investing into the convertible note or the equity, and also you can see your investment terms for investing into the SPV. But there's a few things. There'll be an interest rate, which means that it will accumulate over the time period when they actually convert to equity. So what would make a company want to convert to equity? Well, maybe they've progressed as a company a lot further and they've made more progress. And now a professional is going to come along and invest in their next funding round, typically called a Series A or a Series B, depending on how many rounds they've raised already. And what that means is that the venture capitalist or the professional investor will set the value of the company, but at that point, then your convertible note can convert from a loan into shares and equity. And you will also receive additional shares, typically from the interest during that time that you invested versus when the equity was actually issued. The third thing is a discount rate. So what typically companies do is they look to reward the earlier investor by giving them, for example, a 20% discount on whatever the venture capitalist invested in the day. So that means that if a company was investing 10 million valuation and you invested in the convertible note at a 10 million cap, then if it had a 20% discount, then you would receive the shares at an 8 million valuation, and the company, the professional, would receive at a 10 million valuation, and that's your reward plus any additional shares from the accrued interest. It's a complex product, so we understand that, but once you understand these simple terms, you'll know that it's essentially a really convenient way of investing in equity in early stage companies and then getting that equity set the valuation later once the company has made more progress and secured a professional investor. So that's how a convertible note works. So just to recap, you've got equity, and the equity is held in a special company. We pull everybody together, and then we'll invest in that equity on a pass-through basis. We could also invest in a convertible note, in which case shares will be issued later, but you will get the terms that are outlined in that convertible note. The key things for that are the interest rate, the discount rate, and the valuation cap, all of which will be displayed on the pitch. And we'll go through some of the examples. Other things that we've done is, because we've been involved in investing in crypto and fintech companies, there's been so much innovation over that time. Originally, one of our very first investments was after going to speaking at the very first Bitcoin conference in the world. Max Kaiser invested, and ourselves invested via a fund into BitPay. And that was one of the very first investments that we made. That was done via equity at the time. But we've seen equity get disrupted into different products over the time. People have gone into tokens, and then there was token sales. And so what we had to do is develop a way of investing in a token sale, but with doing that in compliance with securities laws. And one of those was the invention of the SAFT. And where that SAFT came from was actually from an earlier contract that was invested in the equity world called a SAFE. And a SAFE is what's known as a simple agreement for future equity. It sounds very similar to a convertible note, right? You're getting future equity, but the only difference is it's not done via a loan, and it's a more simple, straightforward contract. And SAFEs kind of disrupted the convertible note in a sense in some companies in Silicon Valley. It works in a very similar way, but it's not done via a loan. It's more simple future equity. Then tokens came along, and then they took that concept of a simple agreement for future equity, a SAFE agreement, and created a SAFT agreement, which was a simple agreement for future tokens. The way that this was structured is many of these tokens are considered cryptocurrencies that aren't necessarily securities, and they're not designed to be securities. The BnkToTheFuture token is an example. You can use it to get priority access to deals as a member by staking 10,000 BnkToTheFuture tokens, either on your BnkToTheFuture.com account or on your BF wallet. that is not a security in itself. It can also be used as a payment token in order to get 50% discount off all your trading fees when buying and selling shares in the most established companies in crypto using the BnkToTheFuture token. It also is something that we use in order to reward people. You wouldn't typically reward people by giving out free shares. We'd reward people with our BnkToTheFuture BF token. We do that for conducting due diligence, investor relations, and some other really exciting use cases that we've got as we develop our BnkToTheFuture token ecosystem. Now, that is not a security. It can be used in order to make payments. It can be used as a membership. It can be used as a rewards token. And we want to make sure that it maintains its function as utility because that means that people can buy and sell it on a cryptocurrency exchange. And that cryptocurrency exchange does not have to be a securities exchange. However, when we initially sold the token, before it was actually functional and usage, we could do what's called a SAFT. And a SAFT means that you create an investment contract whereby the contract is actually a security. And so it can be sold in compliance with securities laws because it's simply an agreement, much like a safe or a convertible note, that will give you, rather than equity in the future, it will give you tokens in the future. And therefore, what this allows the company to do is sell a security, and then the investor will receive tokens in the future, but the tokens are not actual securities themselves, which means that it can then be used to buy and sell on a cryptocurrency exchange and can be used as a utility token without ruining the use case by making it into a security. Pretty complicated, pretty convoluted, but we take away all of this by doing that side for you, and we just simply provide the investment contracts, and you can decide whether you want to invest in those or not. So let's recap. You had straightforward equity, the traditional product, the end game of most of these products. Then you had an innovation, which was a convertible note, which is essentially a loan that allows you to convert it to equity in the future and receive that equity based upon the terms of the convertible note. But that became a bit complicated. They didn't necessarily want to put debt on the company's balance sheet, so it was replaced with a SAFE, which is a simple agreement for future equity, a replacement for the convertible note. Then as tokens became a thing, the SAFT was created, the simple agreement for future tokens, in order to comply with securities laws but not ruin the utility of the token once it's actually issued. And then the final one that I'd like to go through is what's known as a security token. A security token is where the actual token is a security. It's meant to be an investment. It gives you entitlement to some kind of future revenue, or it gives you entitlement to, maybe it's backed by equity, and then that equity is also represented by a token which can trade on a securities token exchange. The token itself is traded in compliance with securities laws, as opposed to the utility token, which is more treated as a cryptocurrency, and therefore is open to a much wider audience and has actual utility. Whereas the security token is a straight up investment, and those are the different types of use cases. So I'm just going to give a final recap, and then we're going to go over to the platform, show you some examples so that you can see that, make it more real, show you some portfolio updates, and then we'll head over to all of your Q&A. So a quick recap, and I'm going to do the recap by actually this time jumping onto the screen share. So hopefully, while I get my tech right, so you're probably seeing a big head as I lean into the camera, but I'm going to press a button right now, and if all goes to plan, you will see me disappearing into a dot. Okay, Irvin will interfere, or Irvin will interrupt me, not interfere, if there's any challenge right now. So hopefully you can hear me and you can see my screen, and I'm disappearing into a smaller and smaller dot. At this stage, I'm going to head over to the BnkToTheFuture platform, and hopefully I'm logged in from this account so you can see some of these products. Okay. Do let Irvin know in the live chat if everything's working okay or if there's an issue, and then he can interrupt me and let me know. So, Kraken, a more established company, raising funding at the moment, and we're setting up an SPV in order to pull together. We've had approximately 1,300 investors, and they will be pulled together into different SPVs. If you're from the US, it will be a US SPV, and various other things that we do in order to comply with international securities laws and take out all the complications around doing this via our structures. And so here's the Kraken, and essentially it will tell you how much equity in the company they're offering. And so you can see here, this is the amount of equity they're offering. And then if you do some maths, you can see that that sets a valuation of the company. And so this is an actual equity valuation round. Other deals in the past, they've done a convertible note. And so because they're more earlier stage, so Bitfinex was a straight equity deal, Bitstamp, which is exited now, so producing a returns because the investors on our platform invested in the Series A, which was done, so the way that the history of Bitstamp is the original seed round was done by Pantera Capital. Pantera Capital then invested in the Series A, setting the valuation, and we allowed others to co-invest via our SPV. Then later, some years later, a company wanted to acquire Bitstamp, and that was done at a multiple of the share price that the investors invested in our round, and all the shareholders, the exit happened, the SPV was paid, and then we distribute all the funds to all the investors, and they can withdraw them through Bank to the Future or reinvest it into another deal, whichever they choose. Shapeshift was done via equity. Securitize, I believe, let me check, yeah, that was also done via equity. Now here's Telegram, which will be in the portfolio news. That was done via a simple agreement for future tokens because they are creating their own blockchain. It's going to be a token. It's not designed to be a security. And therefore, when selling it, they do it via a simple agreement for future tokens. Rootstock, very similar thing. When they launched their token, the Rift token, we got an allocation in that. We were able to sell that via a simple agreement for future tokens on the platform. The BitThumb was the BitThumb Blockchain Exchange Alliance was done via equity, and the Bank 52 done via equity. BitPay was done via equity. We've got a lot of equity here, so I can see it's the most popular product. The YREX seed round was done via equity. K.im was done via equity. Here's where we launched the BF token in the early days on our platform, and it was done by a simple agreement for future tokens because the Bank to the Future token is not designed to be a security, it's designed for usage. But we had an investment contract originally that allowed people to get entitlement to those tokens in the future. Let's forward. So here we go. Here's one of our convertible note deals. So Storage Equity, when it was an early stage, they did a convertible note, and that convertible note will be converted to equity in a future date. And we did equity in Bitso, UnoCoin, Brankus, and I think we did Uphold, Edge. Now it was originally Airbits, the Zcash mining, right from the launch of Zcash. Exodus, there we go. There's another convertible note. So the convertible note, I can't remember whether this was done as a safe agreement or a convertible note. Exodus is a wallet. I think they've taken their video down now. I guess we should look at that. And here's an example where as soon as they set the valuation in their next funding round in the Series A, then that note will convert to equity, and all of the SPV shareholders will be issued. They will be getting a beneficial interest in that equity as opposed to that. So, and then I guess we could find some examples of safe agreements, which is a similar thing. I can't remember Bitwage. They did their seed round with us, very early stage. And some of the other companies, I think maybe some of these were done via a safe, just can't see any of those at this stage. Now, an important thing is that it's only equity at the moment that trades on our beta secondary market. So our beta secondary market is where the investors that own shares in the SPV can actually place buy and sell orders, and they can be matched up with other qualifying investors on our platform. And so here, for example, Bitfinex, because it was shares rather than convertible notes, if it's a convertible note, you have to wait for them to convert to equity. Then people who want to buy those shares can place an order here, and any of the sellers can take it if they want to actually sell some of their SPV shares. And also the people that want to sell their SPV shares can put a price and advertise to our other investors and be matched up via the secondary market. You can see the volume and the trade history, but it's only equity for now that in beta will be live on our secondary market. So that's an important distinguisher. And those are some of the different ways of investing via the Bank to the Future platform. And obviously, there's lots of other ways, like, for example, IEOs is where an exchange is initially launching a utility token. They're not authorized to sell securities, so it becomes very murky with securities laws. But then there's also securities token exchanges, which might start getting into the IEO market where they're doing initial offering of securities. And therefore, they might use a platform like Bank to the Future. Or we've got some deals, for example, where let's look at the lottery.com. Let's see if I can find that easily. Where the lottery.com, they were doing a security token here. So it's a very established company that was launching their own token. And it did a token. So the way this worked is, because we're a securities business, we can do an initial offering via our network. And for example, if an investor's from the US, they can invest via our US broker-dealer and various other things depending on your jurisdiction. But the way that this worked is lottery.com would initially launch, so they launched this token via one of our other partners that was doing the funding round, which was Securitize. Securitize have created a protocol for launching securities tokens. Lottery.com used that protocol. Through our platform, we can access a wider network of those that want to invest in security tokens in the initial offering. They do it via our SPV. The tokens were issued to the SPV, and then via the BF wallet, which is the Bank to the Future wallet designed for security tokens, they were able to download the BF wallet on Android and iOS, and they can enter their details and they can take custody of those security tokens, and our wallet will take care of all the process of whitelisting the Ethereum address. It was done on Ethereum, making sure that the data is transferred via the Securitized protocol, via our integration with the Securitized protocol. And therefore, you just have a seamless experience where you can, the tokens were delivered to your BnkToTheFuture.com account, you download your wallet, and then you're able to withdraw them and hold them in a self-custodial way for your security tokens, and the whitelisting is taken care of via the Bank to the Future wallet. So that's exactly how some of these new innovations are coming as these new products are emerging. So there's an example of how we would do that with security tokens. And as this ecosystem evolves, we'll be doing a lot more innovation around that. And so that's all the different, I think that's the main topic that I wanted to cover. So what I'm going to do right now at this stage is jump into some of the news and the portfolio news, so some of our product news and updates. We'll go into the portfolio news at this stage, we'll then head over to the camera and take your questions. Hopefully those are building up, and Irvin will be going through those questions. So I just wanted to give you a quick update. For those of you that upgrade your BF wallet, you will notice that we have now iterated out to be able to support Tether on Ethereum. Many people were wondering where they can hold Tether in Ethereum in a self-custodial way. Well, now you can do that on the BF wallet, the Bank to the Future wallet, where you can send your Tether on Ethereum. So you could go to an exchange, you could purchase some Tether based upon Ethereum, and you could then deposit that to your BnkToTheFuture.com account in order to participate in the secondary market. In future releases, we will make sure that we'll be doing Tether on Omni, and we've also got on the roadmap a liquid integration so that we can also start issuing security tokens built upon Bitcoin as well as Ethereum. And we'll be announcing several more updates over the coming weeks We always break them here at Bank to the Future Live first. So make sure that you subscribe to this YouTube channel. There's a subscribe button underneath if you're watching on YouTube. Hit that button and remember to hit the bell next to it. That means that YouTube will notify you every time we go live. Like this if you're enjoying the content, and please do share it because it expands the reach of our community. So now the Bank to the Future wallet, the BF wallet, is integrated with holding your Bank to the Future tokens, BFT, in a self-custodial way. In order to send them, you'll need some ETH because because the Bank to the Future token was built upon the ERC20, which is an Ethereum-based protocol. We also released Bitcoin support, so that when we launch security tokens built upon Bitcoin, you'll need to actually have some liquid Bitcoin based upon that. Don't worry about the complications now. And also stablecoins have become an important part of this ecosystem. So we're gradually iterating up all of the elements we need to have this, whereby you can manage your finances and your security token ecosystem through the Bank to the Future wallet. Look out for future releases. Also, I had a little play around today with the new app called Coinbase Wallet. So Coinbase is one of our portfolio companies. The Coinbase SPV is traded on our secondary market, so you can buy and sell shares in Coinbase via our SPV. You're buying shares in the SPV, but it is backed one-to-one with shares in Coinbase. I played with their Coinbase wallet app, and I was delighted to see that the Bank to the Future token is integrated into the Coinbase wallet app. So I had a little play around. I sent some Bank to the Future tokens from my Bank